Piper Academy, the morning market report, take two. I am like way off. There we go. Back to normal. Take two, guys. Sorry about that. Some technical issues here. I'm operating this morning on my hotspot. So because we've got high winds that keep messing with the internet, and it's playing hell on me. But guys, you know what's really playing hell on me? All this red, and we are in a sea of red. Shout out to everyone. Thank you for the patience to come back and join us here again, guys. I am watching these crypto bubbles. I'm also watching this market open this morning, guys. Dow Jones, NASDAQ, and the S&P all opening in the red. But guys, the one we're going to talk about today is this bad, ugly thing right here. We're going to talk about this. And it's not so much the 10-year, but it's its relationship with the 2-year and something called the spread. And you guys need to understand this is what's making the market sell off. We're going to talk about this today. We're going to look at some support levels. We're going to talk about when we might see a little ray of hope for this market to find some support and start to bounce. And that's all markets, guys, not just Bitcoin and crypto. Because if this stuff continues to sell off right here above me, guess what? 4-year cycle is not going to happen. It still follows the traditional market. So we've got to find support to get all of this. We're going to break all that down for you guys right here today on the Morning Market Report, Piper Academy Network. Let's get it. Classes in session. Good morning, everyone, and welcome to the Morning Market Report. I see myself with a little line over there. I'm seeing you, bro. I'm on to you. Let's clean that up. There we go. Guys, we're going to talk about a lot of data today that we need to be focusing on. I'm going to break it down Barney style for you because you know I like to go Barney style with things. Keep things simple, right? The lowest level. That's what we're going to talk about. But we are losing some critical levels today on the market side. So we're going to be keeping an eye on as we go through the morning here, how the markets are reacting to new data that just came in. We got some economic data on job numbers, ADP, private hires, and stuff like that. So, but let's go ahead and bring up the OC guy, the man, the myth, the legend, my co-host. What's up, bro? How you doing?
Not much. Man, I mean, I think that we are doing a great job exporting our beautiful internet there. I don't know. Hopefully, we can expand to the whole states. Maybe that's a dream, right? Just kidding.
All I know is I'm hoping this at least holds up for the whole show today. Guys, it might be a little rocky. Bear with me. We're going to make it happen, though. I appreciate everyone's patience. OC, maybe I need to get me some satellite internet. I don't know.
Oh man, yes, please. I've been insisting on it for a long, long time. There's a new
I
one.
know you
Tiny
have.
little
I know
one
you
for
have.
it.
I know you have. Yeah. So the big thing I'm watching today, man, is the economic data that came in. We had ADP jobs. We're going to talk about that. I got an article for it also. But the 10-year and 2-year spread, and a lot of people don't understand that. I'm going to show charts today on the 10-year Treasury yield, the 2-year Treasury yield, and then we're going to talk about why every time someone pulls up a news article for the markets, they keep seeing reference to the 10-year Treasury yield. There's a reason for that. But I think some people are missing that it's not just about the 10-year, it's its relation to the 2-year. So we're gonna educate. We're gonna educate. Let's go ahead and jump over into the news and get that stuff all going here, guys. Bear with me if it's a little rocky because I had to restart everything, but we're gonna make it happen, guys. Stay with me. Stay with me. Let's go. All right, looking at the news here, all the news that's fit to be news. Let me get that in line. There we go. It's like amateur hour here on the YouTube world, man. Market cap today, guys. We are looking at $3.48 trillion market cap right now, down 6.34 in the last 24 hours. Volume is up. You can see a lot of the sell-off guys supported by volume on the sell-off here. A lot of buying pressure coming in. They're trying to absorb, but it is just not working for them. Looking at the CMC Fear and Greed Index for crypto, we're at 54. We're in neutral. Altcoin season, we're back out of the blue. We're sliding back below that 50% mark. So altcoin season held off until further notice. So there will be no altcoin season until morale improves, as we used to tell our Joes in the Army. You want something, you better get excited about it. So, guys, these dips might be a little bit of, it might be a little bit of opportunity for you. Username said light snow dusting in El Paso. Bro, it's not even the snow. We have no snow yet. We have high winds, crazy high winds right now. So, which is a lot of the shout out to anybody in the Palisade or California area, man. My thoughts out to all of you. It's that high wind that's coming across here right now. That's also hitting California very, very hard. And so this is the northern pass. That's what El Paso means, the pass, right? And so that wind is just coming straight through the mountain pass here across us also. But the high winds out in California definitely rocking the spreading the fire even more in the Palisade fires. So shout out to everybody out there. You guys are all in my thoughts. Let's jump over and take a look at the crypto bubbles. Looking at those on the daily, guys, we're red here. We are getting a little bit of green on the hour. Fart coin up 4.9% in the past hour. The markets do look like there might be a potential here for a little bit of a turnaround if it can start holding some of these, build up those hourly moves. But right now on the daily, sitting in a sea of red. Let's go down here and look at the prices. Bitcoin currently at 95,245. Little bit lower than I talked about yesterday. I called some levels out yesterday when we were still quite up high. But yeah, it's we dropped even further than what I was expecting for support. We're currently sitting just above $95,000. Ethereum down at 3,300. Tether moving back up to number 3, taking an XRP spot there, but it is holding stable. It's a stable coin. That's a good thing, right? Look at BNB here at 695, down 3.8%. Solana's down 7.1 at below a $200 mark. Dogecoin's down 9.6. Cardano's down 13.2. It has broken the $1 mark, guys. It's at 98 cents now. Not a good look right there. Avalanche down 10.9. SWE is down 8.3. Like everything is just continuing to get rocked and sold off. Bitcoin, guys, and XRP, BNB, really the ones holding up against the sell-off while we see other things in the teens. What's in the top 20 here? Leo token has moved up number 3 spots to number 20. It's down 0.6%. It's doing pretty well too. That is a decentralized token, I do believe, like Uniswap is. Someone let me know in the chat. I may be wrong on that, but I think that's what it is. Let me go look. Leo token. What are you? I do not know. All right, let's go look here. Unis, SED, Leo markets. Yeah, get out of here. Reject. Reject additional cookies. You can't have my cookies. I did all this for the cookie. All right. Yeah, I think it might be. It's a token burn mechanism. Buying back Leo markets monthly basis. So it's a burn token, it looks like, for some type of exchange. Not sure. Native token is something, guys. Someone let me know in the chat. I'm sure someone knows what the hell Leo is. Let's go look at this economic calendar, though. That's why you guys are here. You came to get this economic breakdown. So let's talk about that. Right now, congratulations to Lunar Beach's crypto when he bought his house. I told him you're going to be happy that you bought when you did because you are going to be sitting nice and pretty for your mortgage rate in comparison to what was coming. We are at 6.99% according to the trading economics. I actually just saw this morning at 7.19 on CNBC as of today. So this was for January, was at 6.99. Today, 7.19% 30-year fixed mortgage rate, guys. And a lot of that has to do with the 10-year. So you can take that cookie. That's right. Username, you got it. So yeah, if you're looking at buying houses right now, not only are housing prices not really falling that far, 30-year fixed mortgage rate is killing people. ADP employment change, guys. Here's this is private employers, okay? This is all no government jobs in his, all private businesses, okay? They added 122,000 workers to their payrolls in December, the least in 4 months. So we're seeing weakening of the labor market on top of this. That's why we're continuing for more sell-off. Previously was at 146,000. Consensus was out to be about 140K for forecast, and consensus came in at $122,000 there. 122,000 jobs, I should say. Initial jobless claims this morning, they expected it to be higher. It wasn't. It came in below. So that might be good, but when we come over here and we look at this, there's a little piece of data here that I wanted to show, and that is going to be continuing jobless claims. Yep, continuing jobless claims. This has not dropped that far. They were expecting that it could go down to like 1.84 million. It still came in at 1.86 million, which was higher than what it was before. So the continuing jobless claims is going up. That means people are not finding jobs to get off of unemployment. Why? I don't know. Maybe because the private job sector is cutting back how many jobs they're actually listing. And so I just wanted to talk about that stuff. I do have an article on that, but let's go and talk about the mortgage rates real fast. So you can see here, guys, 10-year is now at 4.695. This is actually just fell back a little bit. It was like 4.72, but you can see here on the market open, we're still 0.32, 0.24, and 0.21 for the Dow, S&P, and the NASDAQ futures right now for the opening. Oil is also ticking up, guys, which normally that is a sign that there is economic growth, right? Because it takes oil to do everything. It's also rides on the shoulders of inflation. And so we do have that sticky inflation. That's why we saw a little bit of green here on this morning. Now it's fallen to red, so we'll take that too. Let's go talk about private sector jobs. Private sector companies added 122,000 jobs in December, less than expected, according to the ADP. Companies added seasonally adjusted 122,000 jobs, down from the 146,000 in November, and less than the Dow Jones consensus forecast. On wages, pay grew at 4.6% from a year ago. It's the slowest pace of wage growth since July 2021, guys. Private sector job creation eased more than expected in December, while wages grew at the slowest pace in nearly 3.5 years. I think that pretty much wraps up what you need to know there. Let's jump over, talk about these mortgage rates. Mortgage rates hit the highest level since July, crushing application demand, meaning people do not want to buy houses right now. Billy, let me know, as you see a slowdown in your neck of the woods off of these mortgage rates? Or did you guys lock in enough all at once in a mass buy that you guys have enough to carry you for a little bit? Let me know in the chat, Billy. I know that's your neck of the woods, bro. I think that pretty much wraps up what we need to look at on news. I do have a hopium article we'll talk about later, and we'll look at the heat map. But OC, 10-year, 2-year, bro. That 10-year treasury yield. We're going to talk about that in a bit, but there's a thing, there's a correlation that exists there between those two, and it always with 100% accuracy historically um, has ended up doing a major economic thing called a recession. Are you seeing recessionary stuff down in Mexico? Because we're seeing it in the UK, we're seeing it in China, Japan, a lot of Europe, Germany. What is it doing down there? Are you seeing recessionary? Is the labor market weakening? Is a lot of people looking for work? What's going on in Mexico, man?
I mean, we've been having, especially here, we've been having a stronger and more dramatic, let's just go like that, I don't know, politics in here. So I think this is accelerating the possible the signals that we're seeing, especially because we're seeing migration of work going into losing a. I mean, I think it was a 30% of the jobs that we gained last year. So that is very, very worrying. And not only that, migrating for formal to informal jobs. That's also not good for the economy, especially when we're talking. I mean, as we all do, with a countries needing those taxes to revolve into the same services. But yeah, I mean, we are seeing very strong signals of weakening. Man, I don't know why my brain is not working
Labor,
today.
weakening
Uh,
labor.
Labor, exactly. Yeah, weakening labor, and especially also kind of like we are in a hold on Trump taking office, because that will dictate how we're also going to be doing politics with our biggest
Yep.
economy leader here, or economy partner, right? So I think it's right now a little bit of uncertainty. Can we still hold as a tandem? Let's just call it like that. I mean, how is the United States doing? How Mexico is doing? I'm not comparing Mexico's economy to the States, but we are undeniably tandem together, or
Linked.
bound
We are
together.
linked. Exactly. Yeah,
Exactly.
absolutely. Yeah, there's a lot of things
So
coming
can
up
we?
with tariffs and stuff like that too that could have an impact on Mexico
Yeah.
in the near future. So absolutely related and linked. So
Yeah, so I think that we need to see narrative. I think right now you are absolutely correct. We have a weakening labor force, a weakening economy, and if we don't do something, I still think that it's reversible into a point, right? I mean, I don't think that everything is for sure, but we need to start acting all together because, as you mentioned, UK is also seeing those signals
Yep.
here. If I'm not wrong, France is also seeing some
Yeah,
of those
a lot of
signals
Europe
there.
is little pockets all over Europe. Absolutely.
Yeah, so this is just not looking good. We have come out of worst here. Let's just call pandemic, for example, but we are cracked from the previous pandemic. So I think this is going to be a hard ball to sort out, right, or a hard bullet to dodge. But let's figure it out as we go. Yeah,
Going to the
exactly.
matrix there. Shout out to Crypto Billy. He said, yeah, big time slowdown in the housing market. If you guys don't know, he actually owns a home construction business, right? We're buying down rates to 4.875 to spur the sales on new construction, but it cost him about $35,000 per house to do that. So eating into profits there big time on top of that. But yeah, he did buy a bunch, but it's slowing down. He thinks that 2025 is going to be fine. 2026 is going to be the max pain year. So, um, yeah, let's jump into the chart. Let's talk about Bitcoin to show that chart, bro, and then we'll come back and we'll break down this real fast 2 year, 10 year, where they currently are and why they both matter together. So let's jump over here. Let's talk about Bitcoin right now. Looking at the 4 hour here on the left, guys, oscillators on the right side. Shout out to Buck for his setup there. It's working really well for this right now because I need to watch a lot of data to catch this bottom. I am still in a trade currently right now. Let me jump over there and pull that up. My trade right now is currently up $2,824. I have started to go in on my long a little bit, and it's down just a little, but that's why I'm watching all of these charts here. My short still open from the other day that I got into. We gave it out in the Discord, guys. I hope somebody's still in this thing with me, or I'm writing it down to the bottom by myself. I don't know. Looking here at the 4 hour, right now, I have the MACD normalized on top here, and you can see we are starting to get some curvature here. When you start to get those curves, that typically indicates, hey, we might be done with this move, right? But we do have things called double bottoms on the MACD histogram also. Going to be watching that close. We're not getting the lighter color yet. It's still the bright red here on the MACD histogram, so keep an eye on that. Looking at the Oscillator Pro Plus, we are starting to get some curvature here on the Oscillator Pro ribbon. We are starting to get a little bit of a bottoming look on money flow, like it's coming back in. We are getting a little bit on the power bar. So I'm seeing a lot of things that say we're almost done, but not quite, right? So I am watching those. True 7 still coming down. Watching here on the RSI primed. Guys, this is a MACD and a relative strength index made by Chart Prime, and they're both free. So MACD normalized, RSI primed. And I've got this set on Heikin-Ashi candle. So what I'm watching here is you can see it was starting to get curved, but I really want to see the curvature get the thin candles like this. That's when we typically see price go up. You see right here, got thin, price went up over here. Started to get thin and flat, price went up there, right? When you see that start to happen, the thinning, the shorter candles coming through on the RSI Prime, that is when we tend to get the price to come back up. Not quite seeing that yet. Here's the concerning part. A little bit of concernicus. Let's come over here. Let's get rid of all the Mexican spaghetti. Okay, let's get rid of that. Mexican spaghetti, be gone. Clean your plates, boys and girls. What I'm seeing on the daily right now is that we have the MACD is just finishing a bullish histogram going to the red. Okay. Yes, I am saying no $800 link, and there was no Composite Man. Composite Man is not responsible for any of this. I'm getting into that, Eric Wallen. I am absolutely going to talk about that also. We see the money flow is still coming down here, and the RSI Prime just started its red candle to the downside. Guys, on the daily, we are showing the possibility of breaking $91,000 and heading much lower. I want to come over here and isolate just the price chart out, and let's do a higher time frame fib here so we can take a look at that. and then we'll have an idea of what we're seeing here. Let's grab some fibs. Let's bring this up, and let's just pull this fib from this low here up to this high. We are getting our bounce on the 382. If we lose that level, that would be where that $91,000 was at on the local fibs. You see there? 91 right there, that range, right? What I'm seeing here is that if we lose that $91,000 range, that would mean that we're losing to 92. You can see we can come all the way down to 91. That would be all the wick levels down here of support. Okay. Shout out to the wicks. But I would see it like at 87,000. That would be the 50% line of these fibs that we would have to hold. Let's go pull a fixed range volume profile onto this, see what we're getting for support on that. Let's pull this for this whole range. Well, yeah, that would be somewhere around the value area low also, and we have lost the point of control for this entire range. So, guys, I'm watching, I'm watching 91,000 needs to hold. If we don't hold that, we're heading down to the $88,000 range on Bitcoin. And that would not be pretty. I think a lot of people would get wrecked because they got really sucked in on the hopium. Now, here's the other thing that I want to go talk about. I want to pull up this 10-year and 2-year, and then we're going to come back and discuss the spread and why it matters. 10-year right now, guys, is sitting at, come here, 10-year, where are you? 10-year right now is sitting at 4.68. We just pulled back from a 4.73, okay? That means that people are buying it up. They like that 4.7 range. If it's going down, that means they're selling off, or they're buying it up. So it's going down right now because they're buying the bonds. When it goes up, they're selling it. That's the 10-year treasury yield. The 2-year treasury yield right now is getting bought up like crazy because it's at a, well, it was at the high point here at 4.3, 4.32, right? Now it's down to 4.26. But if we come over here and we look at the 2 versus 10-year, okay? 2 versus 10-year, put this on the daily. You're not going to work for me on the daily. That's fine. I'll go over here. I've got one already to go for it. There we go. 10-year, 2-year. And we look at this 2-year, 10-year. We are currently at 0.37. Let's jump over here real fast and let's talk about this. Who we got coming in the house right now? We got Mark Dutch in here. Did I see Alex O crypto drop in here? I think I did. I saw some otters. If he's in here, shout out to you, Alex O, and the gang. Welcome. So let's talk about the 2-year, 10-year, guys. The 10-year currently at about 4.7. The 2-year at about 4.2. What is that 0.37? That is the spread. That is called the 2-year, 10-year spread, okay? It is the distance between the rate of the 2-year treasury yield and the 10-year treasury yield. This is a promissory note that people go, I'm going to give the government money, 10,000, 20,000, however much you put in for your bonds, right? However much they are, however many you buy. And then they are promising to pay you that rate back at the end of that period. Okay. So it's a no risk, well, super low risk. I mean, there's always a risk, right? Government's collapse type thing. But it's a low risk return to protect your money and still beat inflation, right? And so as inflation goes up, people are looking at these bonds because they have uncertainty in the markets ahead. We just had 2 years of over 20% on the S&P and, Bitcoin cycle. Yes, but there's not a lot of people in crypto. So they're buying these bonds up. Here's the problem though. When we hit about 5% on the 10-year or the 2-year pulls away and we start to get to that 0.50 range, that spread being 10 more basis points from now, really, 13 basis points. So that would go from 0.37 to 0.50 on the spread, right? When we hit that, we typically have something occur. Let me jump back over here with OC on the chart with me. Let's put this on a 3-day and let's just talk about this. Look in here, guys. You can see that blue line running across. That's where we currently are right now. You guys see at these levels here what happens, like right there, right there, right there. These ones over here are not pulling right. I cannot find a good recession here. If I pulled it up on Fred, you'd see it. It goes all the way back in history. Guys, this is about the range right in there where we start to go into these are recessions. So the 2-year, 10-year relationship is the correlation that we need to keep an eye on right now. Because if we hit that 50 basis point, this is why I keep saying watch the 10-year. When it gets to 5%, and that spread, because the 2 years should not go up much higher, it's pulling back now, which I figured it would. When that spread hits 0.5, that means the 2 years dropping and the 10-year goes up. When we hit 50 basis points, a 0.50 spread, that is a massive, massive recessionary. So why are the markets selling off? It's not composite, man. It's not anything to do with massive market manipulation. I put a post yesterday about this. It is about people's uncertainty on the labor market, people's uncertainty on inflation rates, and people's uncertainty with tariff and policy regulation on the markets. There's a massive amount of uncertainty right now. What are people certain about? That the 10-year treasury yield is going to pay them 4.7%, which is greater than the current inflation amount. And so that is where a lot of the money is going, is protecting in cash so they can see if that thing goes up. And if they can get it up there, grab that because they're waiting for 5%. 5% will be the break mark for the markets. And I've talked about an article yesterday on this. If we break the 50 basis points, recession, market sell-off is coming. So guys, that's what you need to watch. That's the reason that markets are selling off. And that's the reason that we may not have a full 4-year cycle this year. We're going to keep a close eye on it. They're bringing the boat back, as Eric Wallen said. No, they're not bringing the boat back. They're not bringing the boat back. I got news for you. Every time BlackRock buys crypto, it's because someone has bought their ETF, just so you know. The SEC made them write it that way. They can't even hold Bitcoin. So they're not buying Bitcoin for their wallets. They're buying Bitcoin for people that want it in the ETF. That's it. Tell me you don't understand economics and the ETF policy writing for how they can acquire and hold Bitcoin without telling me you don't understand that stuff. OC, what do you see it on the altcoin side? Let's jump into that stuff. I think I made people understand the 10-year treasury yield and why 50 basis points, 5% is so important and why they need to watch that. We keep hitting 4.7. When it goes up, guys, markets are coming down. Bottom line. What are you seeing on the altcoin side, OC? Let's jump over to you.
Absolutely. Just to before we jump to the altcoin side, let me just take a look at Bitcoin really quick so we can refer back to what's happening with Bitcoin because altcoins are going to be reacting to Bitcoin, right? At this point, we're going into a high order blocking here, and we have two order blocks which are both high. Something that I don't really like that much is they're very equalized in this area, right? I mean, 45 against 55. Yeah, there's a lot of volume, but at the same time, they both, I mean, the same amount of buys and sells. That tells me that we are going to be having a rejection. Yes, absolutely. But we might be kind of like struggling before we do a bounce in this area. So now that we are seeing also the almost flip of the ribbon, or at least where we see flip of the ribbon area, right? Somewhere around here, we can start speculating for at least a pullback. So that pullback will be taking us into looking for entry areas of altcoins, at least at this point. Something important it is that I will also be waiting a little bit. Remember, looking for entries doesn't mean entering right now. It is looking for the opportunity for far ahead into the future so I can be prepared. Let's get started to BAT. What am I going to be taking a look at these two or these ones is because we created some alerts yesterday, January the 7th, and they've been hitting those alerts. So basically, we already had the breakout retest, and now we are on off we go. I relate to this one. Well, this was a beautiful week that played out on BAT. And right now we're breaking through. This is the 5 minutes. Let's go to the 4 hours just to see how we're doing, which should be, there we go. Yeah, which should be the bounce of the trend line that we were talking about yesterday, right? Yes, we have an absorption zone at the topic here, but I still see it just holding this area here and maybe making that breakthrough above the dynamic reactor. So we're still waiting for that breakthrough. If you jumped into the retest, congratulations. I mean, a quick friendly advice, not financial advice, will be move your stop to entry and pay yourself as soon as possible because this can still roll over and move farther back into a possibility into a possible sweep of the lows. and that will be somewhere around these areas right here. So we can still do something like that and then push back up. So bat already played out very nicely. Still looking for the next possible entry. So, and that will be either we break out retest and off we go, entry at the retest, or as we fall back down into these areas, that will be my entry as I have a double bottom pattern here. Like, and let me show you. Come on, like this, right? So as you can see, it goes farther down, and then at the end of it, it just pushes back up. Let's move into the next one here really fast. Ethereum, it is into our entry point, into our main entry point. Just so you know, I already have executed one of my entries. It was right here at the edge of this box. Nonetheless, it is stopping right now. It seems like we already have the flip with the rebound, a reversal, and an oversold. I am expecting a double bottom pattern like this one, or a double bottom pattern like this one. So we can still see that sweep of the lows. That is why I still had that other circle in here, and also reflects our VPVR right there with the next support and the next order block. Look how bullish this order block is. 95%. Sorry, this liquidity zone's 95% bullish. So that's gonna be that is what I'm gonna be executing my next entry regardless. In fact, it is an open order just waiting to be taken. AAVE. AAVE did not play it out as I was expecting. Did went up to the dynamic reactor. I was expecting a breakthrough and fake out. Nonetheless, we have a rejection. Is it all said and done? Not really. We are back into a big area of support here. Seems that we're piercing through. So basically, I will be waiting for the flip of the ribbon, money flow going green, and then I'll start looking for entries once again. AAVE is still a no-no until we start bouncing up and breaking this trend line that has been forming here. Other than that, let me throw it back to you, Piper.
Awesome. Let's jump in and take a look at XRP real fast, guys. We are looking here. I just looked over and saw that XRP was sitting with some green over here on the chart right there above my head. And I was like, okay, let's go see what's going on with it. Well, it looks like it tried to pump up here, bouncing off the dynamic reactor on the 4-hour. It looks like we do have a little rejection here going on the top of the golden pocket. This could be a retest, OC retest for more downside, guys. If we break this 0.618, I'd be watching this value area low. That is coming in currently at about $2.12 on XRP. We do have an uptrend here. We do have the transition ribbon, and it looks like money flow is coming up though. So I think that if we come down and we do get a bounce into 0.618 between the dynamic reactor at 227 and the 618 at 223. If we get a bounce there, we could be making another run up. But of course, it's all going to depend on what happens with Bitcoin. Bitcoin continuing to get sell off right now, holding onto its 3D trend. Still watching. I got to see this. I got to see Bitcoin change before I can get truly bullish on the altcoins right now. But XRP looks like it might be a mover with a potential setup. If we get a turnaround on Bitcoin, it is preempting and front running that. We've also got Flare, which is a play on the XRP. It was one of those airdrop tokens back in the day. It is also showing a little bit of strength too. And then XLM, one of those XRP plays. It's ISO 20022. So keep an eye on those tokens right now. But XRP does look like it's trying to front run a little bit of movement on a little bit of movement to the upside. Bitcoin though not showing the signs of that yet. So let's jump back over to DuoCam. We're about 8:17 here. I want to talk about a couple of things. You got Sol. I can do Sol real fast. Let's go jump in on that. And we will look at that. Deck vector candles. If you're talking about, I'm not sure. I'll have to take a look at that, bro. I don't know that one offhand. OC, do you know vector candles? Do you understand? Deck is asking, can you explain vector candles, please?
Oh, I
Alex,
haven't
so
used vector
yeah,
candles.
I haven't. I
No.
haven't either. I'll do some research though. Thanks. You just gave me a job to do today. I appreciate it. Shout out to Alex O, Crypto in the House, BC Port Corp, dropping those otters. Let's go check a look at Sol real fast, and we'll come back. We'll talk about what Robert Kiyosaki said about Bitcoin this year, and we'll talk about the overlying bearishness and bullishness. Little hopium, little sprinkle of some bearishness, and then we'll wrap it out of here. Let's go take a look at Solana though right now. Solana, where are you? Let's take a ride on the Soul Train. Shout out to TradeFly. All right, here we go. TradeFly's Solana. Oh, look at there. We're getting a nice little bounce on the 3D trend right here, guys. All of the candle wicks hitting there. We do have the oversold. We did get the power bar giving us that peach indication. We're in a transfer. We did just get a true 7. Now, check this out. If this ribbon starts to come up here, but price rejects and goes lower because of Bitcoin, that will cause us to have a divergence, just like we had here. When you get that divergence right after that clipping, that is typically a very bullish time to enter into a trade on that divergence after the true 7 clips. That's that bright pink piece right there. Shout out to Alex O Crypto. He's the one that has discovered that, and it plays out very, very well. Most of the time, you can see true 7 here, followed by a divergence. Look, that was a top there. There it goes, right? Look back here. We had the clipping here. There's that true 7 clip. There's that divergence, and then that led to the upside move. So, yeah, we're going to be watching that one closely. Solana does look like it has a little bit of hopium right now on its chart. Price action giving us support on the 3D trend. If we do come back down while this ribbon is coming up, get that divergence, that would be the entry point, in my opinion. But again, all eyes on Bitcoin right now, guys. If Bitcoin can just trade sideways, we might see the alts come off to start to pop off because Bitcoin's trading sideways and not selling off. So we at least need to see sideways Bitcoin action for any of these alts to play out that way. Let's go talk about this. There's an article here I want to show you on the hopium side. Actually, we're going to give you the bear. You want the bad news or the good news first? I'm going to give you the bad news first, and then we'll come back and talk about the good news. This is on that 10-year rate, guys, and Rect Capital did a really good job of breaking it down. He said the 10-year note, and I can come over here. I can put this on Newscam. You can join me on the screen there, OC. Interest rates are skyrocketing. The 10-year note yield is nearing 4.7%, with mortgage rates on the way to 8% or higher. Yep, you're right, Buck. I got you, bro. Since the Fed pivot began just 111 days ago, interest rates are up more than 110 basis points. This has never happened before. So what's next? It has been 111 days since Fed rate cuts in September. Meanwhile, the 10-year note yield is up 110 basis points in almost all instances other than 1998. Interest rates fall when the Fed cuts rates. This is the only time other than 1998 that we've seen it go up. And I told you guys when they cut it that day, we're not going to see the rates drop. The 10 years going to take over here. Yet another similarity to the dot-com bubble is seen right now. Here's a chart showing the long rate since the Fed pivot began compared to average past cycles. Rates typically fall at an average of 25 basis points. That's 0.25% at this point in the Fed interest rate cut cycle. But we're up big time on this. Effectively, the market is fighting the Fed at a historic pace. For all investors, this move in long-run rates cannot be ignored. As we have said multiple times since November, we believe inflation is back on the rise, and we also believe that the U.S. is experiencing stagflation. So this is reasons that we're seeing the market sell off. He does a really good job of breaking it down. I wanted to bring that up. Well, let's talk about some hopium for you guys to round out your morning. Phuket, aka fuck it, they are taking Bitcoin payments now for tourists. So if you're wanting to travel and you don't want to hodl your Bitcoin, you guys can now spend that going on vacation. And fuck it, you can say fuck it and go to Phuket. The announcement was made today by the Deputy Prime Minister. Bitcoin starting to be used in other places. Me personally, not spending my Bitcoin on vacation at all. Not going to happen. I'm not going to pay capital gains tax on top of my vacation. I appreciate your offer there, but I'm in the U.S. and I can't escape my taxes. So, and then the other piece of hopium for you guys here, Kiyosaki urges investors to buy low and hodl as Bitcoin plunges below $95,000. Okay. Opportunity in crisis. Kiyosaki took to X to express his optimism about Bitcoin despite its recent price declines. Best known as the author of Rich Dad, Poor Dad, Kiyosaki referred to the cryptocurrency's downturn as great news. That's what he says. He reiterated his belief in the investment strategy of buying low and holding long term. With that mindset, with that in mind, let's talk about that. I think that that you do have to look for the silver lining if there is sell off. If we do have this massive economic event, you need to be looking forward 2, 3, 4 steps ahead. Okay. And go, all right, I need to realize that this might actually be more than just a correction or this, you know, do some analysis, listen to multiple people, shake out the noise, and get to the bottom line. Um, Opportunity. That is all it's going to be. Trust me, I am not going to run from the markets. I've been taking profits. I took profits. I told my Discord group the other day, I sold my stocks 2 days ago before yesterday's dump. I'm very glad I did. And then I've also took 10% profit. I'm about 20% now out of my crypto. I'm holding 80% still. I am planning on this cash being it's going to be my breach and clear tool. When we hit the levels that I think are going to be bottoms, when opportunity is at its max, at its highest level, that is when I'm taking that cash. I'm busting through that door and I'm picking up every bit of Bitcoin that I can. That's what the whole point of these pullbacks are, the opportunity that it presents, because we're in this for the long game. And I'm not looking at this like, oh, well, that's it. It's selling off. I'm done. I'm out forever. It is, I need to stockpile my ammunition so that when it is time to pull the trigger, when I see the white of the eyes of Bitcoin, I can pull the trigger and pick it all up. I am the composite man. There's your conspiracy theory. But yeah, guys, Kiyosaki is 100% correct. Buy low and hodl. Um, when you get to these points that it's profit making time, take your profits. It's easy to make money in a bull market. What's really hard is getting out of that market and keeping your money. Do not ride this thing all the way down. And you don't have to sell all out, but you can take profits and you can have that money to re-engage and pick up all the Bitcoin you want when it goes to cheaper prices. How low is that going to be? No one knows. No one can tell. It's all going to be dependent upon the economic data. Remember, Friday, we got massive economic data coming. Friday, we're going to be looking. Let me jump over here and take a look. Friday, we're going to be looking at tomorrow we've got Challenger job cuts report coming in. Okay. But on Friday, we're going to get non-farm payrolls, unemployment, and average hourly earnings, wage earnings. So those are going to be the big ones that I'm looking at. Non-farm payrolls, wage earnings, and unemployment on Friday are going to be the big ones to watch. So, OC, I think you got time for one more altcoin if you want to pull something up and show it.
Absolutely, let's do it. Sorry. So, Pepe. All right, let's take a look at Pepe. Why? Because talking about movers, this could be it if we have a bounce, right? I mean, this is extremely dangerous. Just a quick reminder here. This is a meme coin and it doesn't really apport or give much to the community other than the FOMO or the food. All right. Other than that, now that we have gone through this, look at that. We are in a big area of support, in a big channel with a big area also of liquidity zone with a 67% bullish and also into or almost there into a previous weekly low. So we're getting into a big area of support. We already have the flip of the ribbon. Remember that at this point, I am expecting something like a double bottom or most likely something like that, like a double bottom before we start moving upwards. So this could be taking us farther down here, strip of the lows, and then finally having a movement that will be piercing through the dynamic reactor, and maybe if we are lucky through this trend line that we're breaking through. If we're not piercing through this trend line, be careful because a further move to the downside, it is coming, although I believe that that might not be the case. I believe, and guys, remember, I believe at this point that Bitcoin is going to be holding, and therefore we could be seeing just maybe a little bit of a trickling down area here, and then that break to the upside. But if there's too many options, let's just stick with what we got. All right. It is a huge area of support. If I start turning on other indicators, you'll see that also I have a big order blocking here, and I have a predictive line right there. So let's go back to this one where I have another support line. And finally, where do I have my confluence? My confluence, it is somewhere around 1732, or however serious those are, 1732. and that is going to be my possible next entry. Remember, I want to see that movement, and also I want to see money flow pushing back up, and that will be it for PEPE. I think it's going to be a good mover if we're able to. I would wait for confirmations because it also could be a mover to the downside, as you can see, and that is not pretty if you're buying it. So, other than that, turning it back to you, Piper.
Awesome. Let's jump over. Actually, we'll go to here. We'll bring OC up with me. So here we go, guys. Here's what's going on because I keep seeing people talk about this. I was going to get to it at the end. So tomorrow, President Carter, he died this week. You guys know that. You should. It's been all over the news. But if you don't, yes, he passed away. Tomorrow, markets are closed in honor of his remembrance. So markets are closed tomorrow. Okay. All the sell off that we're seeing today, guys, is because markets really don't know what's going to be happening. They got bad data this morning, and I want to show you guys non-farm payrolls here right now. Previously was at 227,000. It's expected to be as low as 154,000. That means wage is coming down, right? Wages are not being paid as well. Unemployment data tomorrow, 4.3% on the forecast. That means higher unemployment, lower wages, right? While inflation's going up. Keep that in mind. Inflation's still going up, right? We're seeing hourly earnings month over month. Well, expected to be lower, right? Average earnings year over year expected to be neutral. Participation rate expected to be high. A lot of people are looking for jobs right now. Even government payrolls expected to be half as much as what it was, which is a good thing. I think the government pays out way too much money out there. Non-farm payrolls private, you can see it. They're as low as 133,000 from 194. And then the U6 unemployment, that is up 0.1%. So a lot of data coming out on Friday morning. Keep in mind, this is all before the market open, an hour before. People are positioning themselves for the markets to be closed tomorrow with this data coming out before the markets open on Friday. That is also why I expected more pain coming today. But again, guys, keep an eye on the 10-year yield. I cannot stress this enough. I've been saying it for months. Keep an eye on the 10-year yield, and I will keep banging that drum until either I see it pull back out of the 4% range or until something just breaks and I'm positioned for it. That's why I keep telling you guys every day, don't be afraid to take a little profits and be positioned to bust through that door when it's time, right? Get your ammo ready, lock, stock, and barrel. So, OC, that's all we got time for today, bro. I appreciate you being here with us. Guys, if you haven't done so yet, smash that like button. Don't forget to subscribe, hit that notification bell. And if you share this with a friend, sharing is caring. We love you all. Thank you guys so much for joining us today. OC, what do you got for the people on the way out, man?
Guys, thanks so much for joining today. As a quick reminder, click that like button because if you do, you may get a vacations coming your way.
Yeah, you can go to Phuket and spend your Bitcoin. All right, appreciate you, bro. I think we're going to head over. Let me check and see if she's live today. I think we're going to go head over and spend some time over there with Randy Hipper. Yep, she's live. We're going to do that. So we're going to redirect over to Randy Hipper, Frat Mom's house. Go drop those graduation caps, guys. We will catch you back here tomorrow morning, 9:30 a.m. Don't forget to tune in to Trade Academy this afternoon, 4 p.m. Crypto Nightcap tonight. Then markets after dark. And then tomorrow morning, pre-market, check out BC Port Corp right here on Good Morning Crypto. 5 live shows daily. We will catch you guys tomorrow. Trade safe. And as always, use some risk management, guys. Later. And of course, it does not want to go to my video. All right, we're out of here, guys. Peace.